Hi, Tara Christie, President and CEO of Banyan Gold. Banyan's a Yukon-focused gold explorer. Our primary project is our AurMac Gold Project located near Mayo, Yukon, just 50 kilometers from Victoria Gold's Eagle Mine. We just put out a new 4 million ounce resource at 0.6. Look-alike to Victoria Gold just down the road. I'm really excited to be here today to tell you about our plans, including the $16.5 million financing that we announced this morning. We're really well set up for 2022 and excited to be back to talk to you and really tell you the story.
Tara, it's so lovely to see you again. We did see you in February. We've been following you for a long time. I was remembering back to when we first started speaking, you're about 6 million market cap. Now look at you, 130 million market cap. It's a great story about a company that's been really well run, good stewards of investors' capital. But the news of this month, I guess we said the last 30 days, is one, $16.5 million capital raise you've announced this morning. I'm keen to understand what you're going to do with it. And of course, 4 million ounce resource. Not too shabby. You must be pleased.
You know, we're really pleased, but we're not resting on our laurels. We got a lot of work to do, and we have a really clear goal of where we want to get to. We want this to be a tier one asset of significant scale that be of interest to multiple parties, and get it down the road. So, this money we're going to use this year, we're going to upscale our program to 60,000 meters. Which will get us quite a long ways. Remember, we went from 900,000 ounces to 4 million ounces with 40,000 meters of drilling. So that added 3.1 million ounces. Now we're drilling 60,000. Our starting focus is continued on inferred resource growth. I think we haven't necessarily found the best yet. We really want to find some higher grade near surface starter pit area or areas, one of our primary targets. We also want to clearly get this well above that tier one asset ounce level, which is 5 million ounces now for majors. That they're the ones who kind of set this as a tier one asset. So targeting something in the 6 to 7 million ounce range would be when I would start to think about converting some to measured and indicated, and then really doing the economic study that we plan to do in 2023. So we're also going to do the metallurgical work that we need to do to prove that this is heap leach mineable. This funding is really core to that. And, that takes both time and a considerable amount of money, as well as some of the other things that we need to do to really optimize the economics, from working with our engineers early before we even start the PEA to make sure that we've drilled off areas. We understand what the actual pit slopes can be. We use 45 degrees in the resource, but could they be 52? Could they be something else? That really changes your strip ratio, as well as potentially the grade and number of ounces. So we want to make sure we've thought through that piece, and this money really sets us up for that. We didn't want to wait, because I think that doing this work early, getting some more drilling and getting to that tier one status is, key deliverables that we plan to do for our shareholders.
Help me do some crude maths, and people watching us do some crude maths. Okay, so you added 3.1 million ounces with how much drilling? How many meters?
40,000 meters. 40,000
meters. So you're kind of, and obviously with the funding, you are kind of, I guess, set to deliver an additional 60,000 meters. Is it oversimplifying it to say that what you're seeing is a fairly homogeneous ore body?
It is pretty similar. Yeah, it is at power line, which is where we're really focused on the most resource growth. And you'll see in our maps in our presentation on our website, 80% of our planned drilling this year is right around power line connecting to Oryx Hill. We're seeing kind of a core where we're getting that bit higher grade. We had the 1.73 over 72 meters. Most recent press release, 3 grams over 21 meters right from surface. But overall, it's the overall grade is 0.6. So, on average, that's probably what you expect. The power line's now 1.2 kilometers. We plan to drill 2 more kilometers to the west and about the same to the east. And then we're going to take some big step out drill holes about 4, 6, and 8 kilometers east, testing that 16.5 kilometers of what could be, potentially receptive host rock that we see in the geophysics and the geochem. So I would not be happy if we started to move to measured and indicated before we've really kind of understood what the scale of this deposit is. And I'm pretty confident we'll get above tier one asset class. But how much bigger it is than that is still yet to be determined. And that's part of the program this year we're actually allowed to take some step out holes. You remember in that first 55,000 meters, we didn't drill a duster because we didn't want to spend money where we didn't think there was going to be mineralization. But now we actually want some dusters because we need to find some places for infrastructure.
Right, true. I suspect a company earlier in the week who managed to build their plant and the core shack on some of the best grades that they've actually seen to date. So I understand what you're saying. Right, again, I just want to stick with the maths because I want to kind of understand the potential scale of this thing with the capital that you've got available to you. So you've announced the kind of non-broker private placement of up to 16.5 million. The companies usually come in with a little bit more than that to delight the marketplace. But this 60,000 meters, you've 22 of which you've already done. Is that right?
That's correct.
Right. So 60,000, you're fully funded for that. And then how much capital will you be left with at the end of that drill program?
Oh, we'll end up with about $4 to $5 million in hard dollars.
Right. Okay. So
if we spend all the flow through this year, but we could roll some of that flow through over into 2023. The last few years have been turbulent and unpredictable enough that I'm going to be a little cautious. And that's what this funding gives us. It gives us a long runway. We have lots of choices and optionality on how we and when we deploy the money. We do want to work towards that updated resource in PEA in 2023. So that's definitely on the radar. But how quickly we get there, I expect there'll be a real demand for drills and people. We're already seeing quite a lot of inflation with wages. And so it gives us the opportunity to really make sure that we're planning things, doing things right. We have the right people and the right equipment.
Right.
But the scale of it, the 60,000 meters, we're definitely planning to focus on growing that resource with it.
Okay. So aiming for 6 to 7 million ounces, all categories. You're fully funded for that, the balance of this 60,000 meter drill program. We can do some crude maths if we want to assume that it's fairly homogenous and we'll get more of the same, right? So really nice. But what's the picture you're trying to paint here? Because if you're sitting with $4 or $5 million at the end of that drill program in cash, you must expect the market to be able to reward you for that 6 or 7 million ounces. Because you've kind of also got in the background in people's minds going, well, they're going to be taken out by Victoria Gold. It's obvious. Victoria's building up this cash war chest because they're producing at big amounts. It's next door. And, that's surely the kind of backup for these guys. But you're talking a slightly more ambitious game, which is saying, well, look, let's do some big step outs. Let's try and work out the extent of what we've got here. And maybe this is a much bigger district than perhaps people realize. So what are your plans at the end of the drill program? What do you do? Sit back and assess, well, let's reassess our strategy? Or do you genuinely mean, no, I think we've got something big on our hands here and I think we can make a go of this. And we will go and raise some more capital, and we will do more of this thing. We'll do the infill, and we'll also work out the scale of this. I mean, where's your head at?
You're always reevaluating your strategy as you move forward and as market conditions change. But I absolutely do think we have something really big here. I think it's a standalone project, and our project has that scale potential. That's what our PEA is going to reflect. This is a standalone project without synergies with Victoria Gold. Obviously, when we have that tier 1 asset class status, Victoria Gold's going to be looking at us. Other people are going to be looking at us. People are going to be looking at the district because, Yukon really is coming into play. This is a major, newly developed gold district. Victoria Gold in itself is of the scale that a major would be interested in. Now they've got us and there's some other, early stage discoveries in the area as well. But that's really what's going to bring the majors and the mid-tiers in to look at the Yukon is, holy smokes, this is a new district. And, look how Red Lake was developed. Started one mine at a time and more gold kept being found. Well, I think the Yukon's tremendously underexplored. We have that huge advantage of infrastructure as well, roads, a power line with capacity right across our project. It's pretty rare to find that kind of a project with the scale that we have in a first world country with an established permitting process.
True. Okay. 125, 130 million market cap today. You're cashed up. You're good for your drill program. You've got ambition. But like you say, it's in an environment where the majors are throwing off a lot of cash. They are looking to replace ounces. Your shareholders will be thinking, well, what is the best strategy for us? Do we accept bids? Because there's some pretty, well, some big numbers being paid for ounces in the ground at the moment. There's a kind of desperation from the majors, it seems. I mean, what is the best thing for your shareholders?
I think the best thing is for me to grow this as fast as I can and get all that technical work done so that we can show this is a viable heap leach project. That's really what's going to drive demand. And that's really my goal right now. All the outcomes that might happen aren't really in my control. If we get offers, we'll have to consider them. Are we rushing out to find them? No. I know we can deliver a lot more value. Our team is poised for it. We've hired great people. We're delivering on budget. We're ahead of schedule in our drilling. We weren't supposed to wrap up this 30,000 meters until September, and it's looking like it's going to come in, into July. So that's something that's you don't want to slow down when you've got success and people delivering.
But do you feel that you need to bring a strategic partner on board sooner rather than later, or does the 4 million
I don't think we need any strategic partner at this point. Now that we're financed, we can really add a lot of value over the next year. So, if a strategic partner comes along and, it looks like it's a good fit for us, we'll consider it. Just like anything that comes along, you have to consider it if it's good for your shareholders. But don't forget, I'm a big shareholder, so I'm pretty heavily vested, at 5.5%. That's how I intend to make my money in Banyan, is through my equity alongside my shareholders. So I want to generate the most value in my share price. And I believe the best way to do that now is to really drive forward with the plan that we have established right now. And we'll change it as the market changes and things happen.